Welcome to Wealth Unfiltered, your go-to source for industry insights and wealth creation. Stay ahead of the curve with a thorough breakdown of market trends, financial developments, and the impact of current events on your wealth building strategy. We deliver the latest updates and essential insights into the financial world through expert interviews and detailed analysis. Welcome back to another episode of Wealth Unfiltered. We're so excited to be back again. This week, our episode is about retail trends and buying power. So the way that we kind of came about this was Christopher and I were having a really, casual dialogue about the obvious Black Friday, Cyber Monday, the Travel Tuesday sales, because I tend to like to shop and he likes to bargain. So it was a really great conversation for us to get started with. And that casual conversation turned into a conversation about how those trends of people spending during these times, how that plus coupled with inflation and everything going on right now impact the financial world. So we discussed it and we figured it would be not only like a fun topic for people, but also something that would be educational. So for those of you who haven't joined us before, my name is Samantha Parrinello, and I am the host of the show. I am joined by my husband, Chris Parrinello, who is my resident expert. So welcome back to the show.
Thank you.
So like I said, we talked a little bit over the last couple of days about the spending going on, Black Friday, all the sales. And so to get started, I'd like to do your hot take as usual.
Yeah, I'd say, for this episode, the hot take really is, everybody thinks about their own spending and how it relates to the things that they want, how much money they have. But I think the broader thing, and I'm, as a real estate person, this is where I always focus. He who has the gold makes the rules. It's always like a funny riddle that, the real golden rule is treat others into how you want to be treated. So funny story, when I was 7 or 8 years old, my dad always told me the other one. So I was in my second grade class and teacher asked, raise my hand. I'm like, he who has the gold makes the rules. And they thought I was a monster. So the hot take here is everybody remember that, as you're out there spending and everybody's consuming, as we look at the broader markets, what the Fed's doing, what everybody's doing, it's all based off of consumer confidence and what the broader population is doing. So if you really want, and you're patiently waiting for interest rates to come down, what the people in power of that are looking for is the economy to be weaker and for people to be spending less. Most people don't correlate that.
Yeah, no, I think that makes a lot of sense. One of the things that I wanted to start with was, I dive into every episode by really doing some research and making sure that I can keep up with you, right? So, so part of that research, I found a really cool fact because I wanted to know where the term Black Friday came from. And through my research, I found that, it used to be called something about the turkey leg or something like way back in the day. And the reason that it changed to Black Friday was it was still a day of spending, but really what happened was, and I know that it's still valid, but bookkeeping has definitely evolved in the last 50 years or so. And the way that it works is you always either say that you're in the black or the red, black being you're doing well and red means that you're having losses, right? And so they kind of coined the term Black Friday because the thought was that in one day of spending, that you would be able to have the entire year's worth of spending so that it brought you back into the black. So they called it Black Friday. Pretty interesting, right?
That is interesting. I had never heard that.
Yeah. So I was like, okay, that makes A, a lot of sense because I had no idea where the term came from. But B, no wonder there's all the sales. Like they're trying to push as many people as they can to spend as much money as they can. And they've, since COVID, we've seen a drastic change. Black Friday has now become like an entire week. It started with Cyber Monday. Well, when everyone was stuck inside and there was a lot of lockdown and such, they're like, well, we're not really going to get a lot of action on Friday, I think is kind of the mentality. So then they added, and there's a lot of fear going on. A lot of people just didn't want to go out. So they added Cyber Monday. And then Travel Tuesday was added. And in the most recent, 2-3 years, it has become a week long, 2 weeks long, almost all month long. You're seeing random like days where they'll just throw specials our way. So there's been a massive evolution.
Yeah, and I think it's, companies have gotten smarter with their marketing. People understand that incentives drive sales. And when you have a special event, people are more apt to look. And if you can get them to look, then they just might buy.
Well,
Um,
now it's not one day where you can get in the black. It's a whole month.
well, yeah, and it's part of, I think, with the Cyber Monday, the disruption that happened in retail that diverted a lot of people from the convenience of being able to order from their own home. Not only did it change the commercial retail market, but the way that you could reach consumers has changed.
Yeah.
So the money that gets poured into Facebook and all these types of things that,
Like
I
advertising
think,
platforms.
yeah, and I think one thing that I've noticed, this part, from my take, this part of the year, when you're watching the news, when you're following different investments you might have, what you're really noticing is this is when, retail companies that you might own stock in, different types of companies are reporting on their earnings. And a lot of them use this time and it's, are we doing as well as we thought we would? So this is an important quarter for a lot of those companies. And it tells a story. Just like anything, if you follow enough of the macro and micro trends, a lot of this stuff tells a story. And what I've seen this particular quarter as I'm watching the news is it tells a story that makes a lot of common sense. So people are tightening their belt buckle this quarter. People are a little bit more fearful. They're not spending as much discretionarily. There's companies that are doing really, really well, but you see a company like Target that is suffering, and they're one of the more expensive retailers when it comes to like compared to like Walmart. The surprise that I saw when I was watching the retail earnings reports where it was TJ Maxx. TJ Maxx like through the roof. You think about it, people are out there looking for value. And when people are out there looking for value and they're wanting to save 15-20%, they'll go to a place like TJ Maxx. We love TJ Maxx.
I could speak to that. We were there over the weekend after Black Friday and it was wild.
100%. And that is such a small thing to notice. And I'm not interested in buying TJ Maxx stock or Target stock for that matter. But I think that understanding those trends and hearing that data point helped me kind of realize how I'm thinking. And just like with the Black Friday, you bring up Black Friday to bring it back to that. I remember when I was younger being excited and standing in line and trying to get a TV, or I think the last time I stood in a Black Friday line, I was getting a CD writer that was going to go into my computer that I could burn CDs to like play in my car. That
You're
was like
really aging yourself,
the last
babe.
time I remember standing in line at like 6 a.m. I was like, I'm going to install this. I'm going to have all my music.
I feel like the last time I did it, I was like a very poor college student. And I was like, I really want this nice thing. And this is the only way I can afford it.
Yeah. But what I've noticed now, we had this conversation the other day because we're seeing things that we've been kind of tracking and we want to get a good deal on it. And now my attitude is, well, let's see what it costs in the middle of December.
Right.
Let's see what it costs at the end of December because it's all supply and demand. And at this point, what is being telegraphed by the retailers is they're not selling as much as they'd like. And the discounts are just going to keep coming. So if you're patient and you have a little bit of wiggle room in what exactly you want, it's not a specific product that never goes on sale. I think the deals are on their way.
I actually saw today. So yesterday was Cyber Monday and I was, me, shopping. And so I was looking at certain items. And then today I happened to just like see that they were still on, how Amazon will show you like search back at your previous things you've been looking for. So I just kind of like wanted to see what the price difference was. And it went like back up in price. But then you know how they have like a secret coupon, like you just have to click it. So instead of it being on a Black Friday or Cyber Monday deal, it was like reduced by this coupon amount. So I'm thinking they probably didn't sell the allotment of what they wanted to sell. And so they're still trying to get people to come back to it. So now there's like a special coupon, but it's not technically for the day. I was like, oh, they've been sneaky.
Yeah. I mean, it comes back to the core tenet that like things are only worth what other people are willing to pay for them.
Right.
So if you have more product and you don't sell it at the price that you thought was a really good deal, it's going to get discounted further.
100%. So kind of what you were talking about, I was looking at the two mindsets that economists have when they look at Black Friday. So they look at it as two separate ways. One mindset says this is a short term, either gains or losses, like way of seeing things. And then the other one is gauging the overall health of the entire retail industry.
Right.
What do you believe? What do you think is relevant and true?
For the things that I'm interested in, which is typically, broader investments and how the economy's doing and specifically, different real estate asset classes, I look at the broader, what the consumer's doing is what's more important to me. If I were primarily interested in finding value among like maybe stocks of retail companies, like then I would be kind of looking at data points and, just like anything else, if, I think Target's a fantastic company. If they're depressed for whatever reason, because right now people can't afford to shop there and they'd rather shop at Walmart, then I would be like, oh, maybe, if the price gets low enough on Target and they're not hitting their numbers, but in better times they're going to do really well, I might be motivated to buy some shares of Target. I tend to focus on real estate assets. So what I'm looking for is if the overall consumer is hurting and doesn't have as much money, then that would lead me away from certain real estate asset classes. So retail, hospitality, when times get tough, when inflation's high, when people don't have as much discretionary income, you might not go on that vacation that you planned. You might not, buy the 80-inch TV, you might buy the 50-inch TV.
Or you might just hold off
Or
until
you
you
might
can.
not hold off because you already have 4 50-inch TVs in your house, and how many TVs do you need?
Right.
So a lot of that would drive me towards asset classes that kind of have a hedge. And I think the ones that do it best are housing, whether that's, multifamily or single family or build to rent, or, the other ones that tend to fare really well in times like this are industrial.
Oh yeah. Yeah, absolutely. Especially with what's going on right now
Yeah.
in the
Yep.
economy.
100%.
Yeah. So one of the questions that I wrote down to ask you about was, how do you feel the current economic environment is influencing consumer buying power now?
Yeah. I mean, I think that there was a lot of fear leading up to the election. I think what you saw right after the election was, at least for some people that were very economic focused, they were thinking, oh, things are going to get better, and there was a little bit of euphoria. I think now it's kind of a leveling off. Like what I'm seeing, and especially, I feel like I have some insight into this because there's 1,000 different LPs that invest with Viking, and I'm talking to them on a daily basis. And when I chat with folks, people are optimistic but cautious. So cautiously optimistic.
Right.
We think things will get better. We remember what 2016 to 2020 was like. Everyone seemed to have more money. Property values were rising. All of this was happening. It's a different time. I don't know if it's going to correlate to now. I want to wait and see. So I think we're in that kind of evolution of the consumer, regardless of how wealthy or not wealthy they are. People are buying their basic needs. They're splurging on the things that are important to them. But a lot of this is a wait and see approach, and they want to get into see what happens from January to June.
I think especially, I mean, my next question leads into inflation and wages and how you think that they um, impact these changes that we're talking about with buying power. But one of the things that I think we're seeing a lot of is like the price in groceries is
Yep.
become almost obscene. Like there are
Right.
certain things. I mean, I think we were looking at eggs the other day
Yeah.
and just blown away at the pricing of that. And so when you talk about buying power, even just essentials such
Yep.
as food and groceries, gas, that type of thing, they're really being affected.
No, 100%. And I think that that's what affects families the most. So I think every potential presidential candidate kind of campaigned on the idea that they had a plan to bring that down. And I think we know why a lot of those prices went up, and it had to do with, quantitative easing, more money coming into the money supply, the cost of goods is naturally going to rise. Um, Even if you lower inflation, it isn't going to deflate the prices. They're just not going to grow as quickly. So I
I
think,
think it's a good point.
well, right. I think that's important to realize. But at the same time, just like we're talking about with Black Friday, and I think that's how this correlates really well. Um, prices will come down if people are buying less things. Because
Right.
people want to produce their maximum output, and they need especially things like food that's perishable and things like that. So there is an opportunity for some things to come down, and some things are stickier than others. And like what you've seen a lot of that is with like single family home prices. You'd think with mortgage rates so high that there would be massive price reductions. And you are seeing people that are forced to sell having to lower their price. Like we live in a college town in Gainesville, Florida. If you get transferred to another university and take another position, like you don't have the luxury a lot of times of sitting on your house. You want to sell it, you want to go buy a new house wherever you're going to go. They might have to reduce the price substantially from when they bought it if they bought it in 2021. But most people that bought homes between 2016 and 2022 bought it with a fixed rate loan for 30 years at 2.6% interest, like we did.
Right.
And, you're not motivated to sell. In fact, you're unmotivated to sell because you're like, if I go and buy the same house with twice the interest rate, I'm going to get a worse house any way you shape it up. Because you've lost a ton of value because the cost of capital is more today. So that's one of those areas that's super sticky because a lot of people just aren't going to move. And there isn't going to be as much inventory on the out there in the world for people to choose from. You couple that with the fact that because interest rates are so high and construction loans only use variable rate loans, cost of construction is still high too. So there isn't a lot of new supply coming online.
Yeah, and we've actually seen, at least in our area, that they're some of the people who are actually, because they were actively already building prior to this really starting, they're the ones who are reducing some of
The most. And
the cost of the house and price.
building in Black Friday specials and incentives and
Yeah.
things like that, where it's like, well, we can give you a special interest rate that we're going to subsidize, or we're going to, reduce our fee that we would usually charge. Or if what a lot of builders do is they will master plan a community, or they will own a set of lots within a community, even if they didn't master plan it. And then if you buy the lot, you have to build your house with them. I've seen a lot of those people massively reducing the price of the land because that's something they have a lower basis in. They might be worth $350 today, but it was worth $150 when they actually bought it, or whatever, how they came to own it. So it is interesting, and it does all kind of tie together, which is the broader, ebb and flow of supply and demand.
Right. So as far as, we talked about retail trends a little bit. How do you feel like the seasonal trends that are happening will actually affect multifamily moving forward?
I think that, multifamily is situated to weather storms pretty well. I mean, when you say seasonal trends,
Mostly
you
like
know,
the spending we're seeing.
yeah, I mean, I think if we had our asset manager up here, Ed, like he would tell you that the winter months are usually pretty tough on collections because people are spread thin. They're usually buying gifts. They're usually traveling. When you see delinquency, it usually happens in the winter months. Um, Outside of that, it's really more asset management type issues where you might see a little bit more bad debt. You might see a little bit more occupancy issues with higher vacancy. Um, but as far as well, and you have kind of a dead period where groups like Viking doesn't acquire many deals towards the end of the year. Like we have a couple that we're working on that we've been working on for a couple months and we're closing up. But like December 15th hits and like the financial markets, people in real estate usually, we'll see in January. There's
For
a
the new
big,
year.
yeah, there's a big, NHMC is in January, and that kickoff, you meet with all the people that you hear about what people want to trade in the next year, and you kind of hit the ground running second half of January, early February.
So this is usually more of a soft spot for just multifamily acquisitions and even
And asset management as well. Yeah,
okay.
I think so.
I feel like that's an interesting take that maybe a lot of people don't think about because it does make a lot of sense as well. I think one other factor is that people also don't like to move in the winter.
No.
So like the people who would maybe their leases could be coming up, mostly probably tried to make that be a spring, summer, even fall activity. Like
Yeah.
everyone's like, let's make it to like these months where moving is actually more accessible, especially in certain areas of the country. But I think that also might have a little bit to do with that too.
Yeah, no, 100%. And then I think, the one thing that's kind of seasonally a plus, at least, in the business that I work in, is what usually happens at the end of the year is investors are out there trying to figure out how to prepare for next year's tax season.
True.
And that is an area where investment, sales, however you want to break it up, if you're offering a product that offers bonus depreciation or some sort of pass through product that allows them to offset either active or passive income, that's usually something that will drive towards the end of the year and help you wrap up any of your projects.
Yeah. Very true. I feel one of the things I was going to ask you about was, we spoke briefly about the evolution of Black Friday, but specifically how consumer spending has become almost entirely online.
Hmm.
So we saw, I think we've actually seen a little bit of a resurgence in the last year or so, 9 months to a year or so, as far as like in malls, we see some new stores coming. We've seen some come back that have, gone away for a while. But I think it'll be interesting to see how not only AI, but also just the continued online growth changes the evolution of spending altogether and what that means for the retail asset class.
Yeah, and I think that a lot of that is going to manifest in a way where it becomes kind of like a hybrid approach. I think that brick and mortar hasn't really caught up to the technological advances that have allowed people to order off of Amazon. But I think, I know that you feel this way. I know I feel this way. I like the convenience of ordering on Amazon. Half the time I get something and it isn't what I expected. And it's like a little bit frustrating because I didn't get to touch, I didn't get to hold it. I think that eventually when retail is able to keep the convenience of being able to have something delivered to your door, but offer an opportunity for you to go somewhere, touch, feel, play with the product, and then you get home and it's sitting at your front door. Like that's going to be, I think, where things eventually land. And I think Amazon has done wonders with the speed in which it can get things to you. I imagine with the technology that, drone technology and things like that, that we're not too far away from
I didn't even think about drones.
being able to have the speed cut down even more, especially with shipping fulfillment centers that are, I think the storage, shipping, fulfillment space is a place that's really going to take off over the next decade.
Which also means that manufacturing is probably, it's just another piece of manufacturing that's going to continue to boom with everything we have going on.
Right. Assuming that we hit a strong economy where people have discretionary income, manufacturing should stay strong. Part of, this new administration, I think that a lot of times, and I've had conversations with people about tariffs and what the impact they're going to be, and we'll see how it turns out. But I think you have to look at it as inflationary because if you're double taxing a good, if your plan is to buy a good that's coming from another country, that's going to get double taxed, it's going to cost you more, and that's inflationary. But I think the consumer behavior piece is, well, if I'm going to have to pay $55,000 for a Nissan Maxima, or I could pay $35,000 for a Ford Mustang, maybe I'm going to take the discount and the value and buy the American made product. I think that's kind of what the administration's hoping for. And then maybe use it as a chit to negotiate trade deals with other countries that don't want to have that unfair advantage where American goods that are made here cost less, even though everything costs more. Because
Absolutely.
I hear a lot of people say the person that loses is the American consumer, and there's some truth to that. However, the American consumer will be stronger if America has a stronger manufacturing base and more goods are made here, and we're not buying everything that we consume from other countries.
Right.
So it's it's complex but quite simple.
Yeah. Well, and there also needs to be a balance. I feel like for a long time, America has just like pushed all of our goods outside of our own country.
Right.
And that causes a weaker country, like an overall
Yeah.
country, as far as being strong and independent, right? Like art, literally independent is like one of the words that's supposed to talk about America. But if we're so reliant on every other country to bring all of our goods, our food, our everything that we use in, then it doesn't really strike me as independent, you know? So I think we need to be a little bit more well balanced. I don't know if tariffs are the right answer. I really, that's not really something that I've looked enough into, but the one thing that I know about it is that if we can at least try to, in whatever way, make our economy stronger through American manufacturing and giving our own farmers and giving our own, just like really, really helping the American people to have a stronger like opportunity, which is also a part of like our country, then I feel like we're winning. But I feel like that's been a while since that has truly been part of anyone's strategy in any of these administrations because we've really focused on so many other issues. So I'm hoping that maybe this one will be a little bit more centered in what we're doing just because I there's a lot of other things obviously going on in the world and I really want to live in a country where I feel like we're strong. So I think part of that would be not being so reliant.
Yeah, and I think it's just like anything else. If you want something to happen, it's usually the best path to getting there is through an incentive. So if I'm a company that makes widgets and I know that there's no penalty for making the widgets in Mexico, and then I could bring them back into the country and sell them for the same price as somebody that had to pay higher labor costs and couldn't compete with me on price on the same widget, like I think, if there's no downside risk, why not do that? Um, so I think that part of what the country needs is to emphasize that we want to support our own manufacturing base. We want to create more jobs in our country. And if somebody is going to bring in goods that cost less, then maybe having a tariff on them isn't an awful idea. But we'll have to see. There's also lots of things that the expertise to make that really well from another country. Like I'm probably not going to buy, you know, American made brie.
I hope not.
Obviously a joke, but yeah, I think, as far as retail trends go, I'm optimistic on the next several years. I think most people are. I fall into that same cautionary wait and see approach. I'd like to see what happens exactly. I try not to give too much benefit of the doubt based off of, past performance in a completely different era with different circumstances. So I want to see what can get done, how things turn out. And then ultimately, and what you're going to get from us on the show is based off of what we see and how we feel about it. How do you protect yourself and your family and your wealth, um, given the circumstances that we're dealt with? Because ultimately, we don't have a ton of control other than getting out and voting for the people that we think are going to do the best job.
So, on that note, that brings me to my last question for you because I feel like that was the perfect segue. How should investors prepare for shifts in buying power then for 2025?
Yeah, when it comes to investable dollars and how to kind of build a thought process on going into next year and where there might be value, and it's all going to depend on how your portfolio is currently constructed. I think is the easy out answer. Um, but I think that what I tend to do, so personally speaking, what I tend to do is I look at things that are overvalued, that are in like frothy markets, and I'm like, I want to know how that happened and what dynamics went into play for that thing to get way past wherever I thought it could be. And then I want to go find something else that has the opportunity to do that. I'm not interested in the thing that already exploded. I'm interested in finding the thing like that has the same technology, that has the same kind of growth trajectory if things go right. And then I want to start researching, okay, if we know that there's going to be strength in American manufacturing and we know that something like Nvidia just like totally rocket ship took off. Now for NVIDIA to create the same value it did for someone that bought in at a couple hundred a share, it would have to 100x. Whereas where it already went from today, it's probably not going to have that same growth, but it's still very, very strong. If I was sitting on a lot of NVIDIA stock, which I'm not, I would probably want to take some of those winnings, those earnings, and redeploy them into something that could have the same kind of growth. Still keep a position there, still value that company. I think that they have a really long runway where chip stocks and someone with that kind of market share are just going to be incredibly valuable. But my opinion is that when you think that there is a chance for something that's not obvious, like we know that a new administration's coming in, everyone has high hopes, no one really knows how it's going to manifest, what's going to go up, what's going to go down. You want to have a certain amount of liquidity that you can catch onto a trend that's early and play some capital there. And then still also protect yourself and hedge those more aggressive bets with something that you feel comfortable has the underlying fundamentals to, even in a really bad downturn, still weather the storm.
I think that's really great advice. And in a time where there is such uncertainty, make sure you have liquidity so that you can take advantage of opportunities. Man, that could have been a tongue twister. But I really think that is really, really great advice, because most people probably don't look at it that way. They're like, let me try to see how I can save. They don't look at it as an opportunity to invest money, because usually fear means like people don't want to act. So I think having that optionality to do that is really important. So great advice.
Right. Well, and it's twofold, right? Because like the downside to that is dollars that you don't have out there working for you are costing you. So the dollar loses value every day due to inflation, things like that. So I always recommend having your money at work for you, but there are ways to put it at work for you and keep a certain amount of your portfolio liquid in something that you can move on for the right opportunity.
Right, because there's liquid assets that you can invest in and remove.
So don't put it in your mattress.
Yeah, no.
Don't leave it in your bank account. Keep your money at work, but have some flexibility to where if the right opportunity comes around, and you start to see some of the shifts that have created immense opportunity for some other companies and other strategies, you can deploy it, test it out, learn everything you can about it, and then make it part of your portfolio diversification.
I love that. Well, I feel like we've wrapped up this pretty well. Is there any last thing you'd like to say?
No.
Awesome. Well, then I'm just going to go ahead and say thank you to all of our listeners. Thanks for joining us today, and we look forward to seeing you on our next episode.
Thank you.
Thank you for tuning into this episode. We truly appreciate your support. Don't forget to subscribe, leave us a review, and share the podcast with your friends. Until next time.